Yo, everyone, what is up? Welcome to episode 21. I think it's episode 21 of the Funded Challenge. As you can see here from my screen, it has been a very good week. We have read the markets like a book. I'm very happy with this week. We made 2%. It could have been like a 4% week on 0.5% risk, which is mad. But we got very unlucky with some trades. But yeah, I'll go through everything now. So I made a video for Monday and Tuesday. I forgot what the results from those 2 days were. Let me just check. So Monday we won one trade, and then Tuesday we lost one trade. Okay, so Tuesday we were 2 trades in and we were up 1% on the account. That was the last video. That was episode 20. And so on Wednesday, I took 2 trades. The first one was a loss, which should have been a break even. And the second trade on Wednesday was a break even. And then I took a trade on Thursday. It was a win. And I took a trade on Friday, and it should have been a win, but it was a break even. So, but in general, I'm still very happy with the week. No over trading, nothing wrong emotionally, stuck to the plan. Very happy with this strategy right now. We've got a lot of data collected, so I'm just becoming more confident in it. The more we trade, I'm understanding what conditions it works well in and what conditions it doesn't work well in, which was a big problem of mine that you guys saw me go through in the previous videos. Like, I was literally like trading in very bad conditions, and I'll go on like a 7 trade losing streak. And now these are those same conditions where I was took that win streak, but instead now I know how to trade it. So we're learning a lot. I'm very confident in the strategy, and I'm probably going to add some more markets. So I was speaking to my very first mentor, and he was telling me that I should look at what pairs correlate with what I'm trading and use that to trade those pairs as well, and then also use it as a confluence. So I believe I'm going to begin. Well, I don't believe it. I've already started collecting data on NAS and gold. So I'm going to be using those, and I'm also going to be starting to look at DXY, because I've tried to look at DXY a few times in the past, and it just confuses the fuck out of me that I can never understand how to correlate it. I can never understand, like, looking at 2 charts at once is just like brain fucks me. But what I realized and what my mentor told me, he's very well connected in the trading space, and he told me, well, he's not really my mentor. He's more like the first guy who taught me SMC. Like, when I was in a trading community, he was also just a trader in there. He wasn't the owner, but he was just teaching people. And when I had questions, he would teach me on it. He would do some live calls with me. So he was kind of my mentor for like the first 3 months of my trading. And now I've been trading for like almost 2 years. So, and I was just speaking to him again, because we just speak every now and again. And that's what he told me. Because I told him, I was explaining to him my problems I had in January. It is currently August. So in January, I got funded, and I was doing really well trading JPB, JPY. I had a 100% win rate on phase 1, 60% win rate on phase 2. I passed, I did really well. But then after that, I could not win a trade. And I didn't go crazy emotionally. Like, it was a very, very slow process for me to lose that account. It took me 2 months to lose that account. And I was taking 2-3 trades per week, sometimes even 1 trade per week, because I was really, really trying to focus on just catching the perfect trade. I truly believed I was a profitable trader, but I still couldn't win a trade. And I lost every single trade after I got funded and then blew the account. So he told me a good thing to do is to use more pairs. That is what professional traders do, and that is what most profitable traders do. And the whole time throughout my journey, I've believed that just stick to one pair, use one pair, and just master it, and just do that until you're consistently profitable. But he told me, he knows that's also the general consensus in the trading community, and he also told me that he believes it's completely wrong. Obviously, everyone. We have to realize in trading, everything is each to their own. There's going to be a large portion of traders who are going to perform better when they're starting with just one pair. And there's also going to be a large amount of traders who may perform better using multiple. So take everything with a grain of salt. One person isn't 100% right on anything ever, especially in trading, because it is very personal. It's very rare you find two people who trade the exact same strategy the exact same way. Even in communities where mentors teach all their students, everyone always ends up changing it to a way that makes sense to them, because everyone sees the charts differently. Like, you're looking at my screen right now, it's just candlesticks, it's just looks like some basic patterns, but you can see what you want to see. If you're focusing very hard on wanting to see one particular thing, you will see it, and other traders may not see it, even if you're trading the exact same confluences and same concepts. So, okay, enough yapping. That's just an update on what I'm doing. I just wanted to let you guys know that the US 30 strategy is looking good. I think this is probably going to be my main trading currency forever. This indices, maybe with gold, and NAS and other indices possibly, and then we'll look into futures in the future, because I believe futures markets moves very similar to indices. And yeah, and I think I'm done with Forex. Yeah, JPP, JPY, JPP, USD. I don't know, I struggle with trading it. The way it moves, it's just way too like slow and consolidative. I like these clear movements right here. Clear movements. I know I'm bullish. I'm just taking longs here. Like, but with JPP USD, it's like we'll see, or any other forex pair. You just see so much like boom, boom. Oh fuck, what have I done? Let's see, boom, 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 boom. Like, it's just that is just like, I cannot trade like that. I much prefer the markets moving like this. And keep in mind, US 30 doesn't always move like this. Like, this is just one time. Like, there are times where it does move pretty similar to Forex. But I don't know, personally, me, I can just navigate it better. And all the data I've collected on it, my win rate's a lot more consistent. My trades are a lot more consistent. My strategy is a lot more simple. Trading with this has helped me use a simplified version of my strategy, which I couldn't use on Forex pairs. So yeah, that's that. I'm going to start collecting data on other pairs as well, because I like how they move. And there was two good trades I saw on them at the same time on my trade. There was this one for gold, and there was this one for NAS. Those fit my strategy like exactly. I'll probably run through those in a future video when I start trading them. But yeah, for these ones I'm gonna go 1 to 2, because I want a high win rate. So I'll leave US 30 as my 1 to 3, because that's what I've collected all my data on. But since I'm gonna start collecting data on these now, I'm just gonna go 1 to 2, and I'll see from there, because I prefer higher win rate and lower RR. That's how me personally I like to trade. Anyways, we are 8 minutes in and we still haven't explained any of the trades. Okay, so Wednesday was the 13th of August. So it'll probably be the 14th of August, like midnight, after midnight. So I count, like, if it's after 12, I still count it as Wednesday's trade. This is Wednesday's trade. Even though it's 14th of August, I count it as Wednesday's. Oh, yeah, I believe Wednesday was the 15th. Yeah, Wednesday was the 14th. Okay. Now I'm confused. Anyway, okay. Yeah, this was Wednesday's trade. And this would have been the Wednesday. This would have been the Wednesday loss. This was the Wednesday break even. This was the Thursday win, and this was the Friday break even. Okay. So Wednesday loss. Pretty simple. start off on the 1 hour for everything. So going into this week, my 1 hour was my high time frame range was bullish because we had a daily breaker structure here. We had a very strong daily supply zone that price reacted nicely off, and this is a condition where my strategy works a lot better. So instead of just having one high time frame breaker structure range, when I have a high time frame breaker structure within another high time frame breaker structure range, my trades are normally a lot higher probability. So when price comes down to a zone like this and it starts trending up, it's very good. Comes like this, reacts off a daily zone, starts trending up like this, it's very good. Comes back down, reacts off a daily zone, is very good. We'll go on the daily, we'll see what that looks like. Yeah, the daily is making clear breaker structures, moves to the upside. So yeah, I like sticking to longs, and because the daily is in a bullish state, my longs have been good. The only thing that I can get caught up in and start going on bad losing streaks is trying to catch retracements when the daily high gets taken. So instead of trying to wait for the daily high to get taken and wait for a mid time frame down, I'm gonna just wait for the 1 hour to shift downwards. So it's a higher time frame. So yeah, basically I've kind of stopped taking retracements unless it's under very, very strict conditions. So yeah, we have our daily range, and then now we have 1 hour ranges. And 1 hour is clearly trending to the upside, making breaker structures to the upside. The reason I took shorts on... Did I take a short on Monday? Monday, I took a... don't know if that was Monday's trade. Alright, this is going to be a really long video, I can already tell. Anyways, it's fine. We haven't had a long video in a while, I don't think, so... So it was... Yeah, I took this trade. I can't even remember, man. Bro, yeah, I took this trade. I took this trade, and then this one was forward tested. That's right, okay. So, yeah. So, yeah, okay. So, the reason why on Monday it was bearish, because we had the 1 hour come up here, and it swept, and it didn't close above. So, when that happens, my bias shifts to bearish. So, if it just sweeps above and doesn't close, my idea that this low becomes weak, price is coming out to take this low. So when New York opened, we had our mid time frame shift, retracement, and then 1 minute shift within the mid time frame. Very simple. And yeah, so Wednesday's trade, exact same thing. 1 hour breaker structure, closed above, small retracement, 5 minute shift up. So with US 30, I don't need to wait for a big deep retracement at all. Like, this is very valid. So that's why I like it, and I'm not constantly like guessing and waiting. Is this the supply zone that's gonna hold? Is this zone gonna hold? Is this zone gonna hold? Never mind, it's the extreme zone. Oh wait, it's the extreme zone is coming down to, and it doesn't even react off any of them. It just goes straight down, and like, that's why I struggled a lot with SMC in general and Forex. But with US 30, if the market is trending in a direction, it's just going to keep going in that direction. Don't need to wait for the perfect zone to be tapped into. I just wait for like price action pretty much. So we have a retracement, and now I'm just waiting for the shift up and maybe like a point of liquidity to have been swept just to increase my probability. But that's it. So we had that 5 minute shift here, come back, came down, 5 minute type 2, this candle swept, and then it took more than one candle to engulf. So I took that, price went up, all day, went into the next day, and then this happened, and it should have been a break even. I had the break even set all day, but we got slipped because this was news, and it ignored my break even and just took us out. So yeah, that's just what happens. And here was a losing trade. So this was the losing trade on. So yeah, so this was a loss, and this was the second loss. So this was our last loss of the week, and it was a retracement trade. Yeah, so right after the 1 hour got swept, we had a 5 minute shift down. And that's what I want to wait for in my retracement trades. I want to wait for the shift to happen immediately after sweeping, and I want a strong candle closure like this, like big displacement to confirm the shift down. And then we retrace, and we had a very nice 5 minute type 1, and yeah, that's why I took the retracement. But in hindsight, I shouldn't have taken that retracement, because my rule was to only take retracements after a daily high has been swept or a 4 hour high has been swept, and then the shift happens immediately after. And this was a 1 hour high that was swept, and then I took a retracement trade. So I kind of didn't follow my rules there. So yeah, that was kind of on me. Yeah, so that was Wednesday's first trade. And then this was Wednesday's second trade, right around here. Go to load. Okay, Wednesday's second trade right here. So it was very nice. We had the 1 hour breaker structure up, retrace down, and then we had a clear 5 minute shift up, 5 minute breaker structure right here, and we had one here as well. So two 5 minute breaker structures up. So I know we're bullish now. And we came down. Price reacted off the extreme candle that caused the break, and we had another 5 minute type 2 with a FVG, so that was good to me. We took it direct off that confirmation. Price was coming up very nicely, and I was like, I bet it's a winning trade. And it came down and took me out break even, and then ran to TP. So that's just been like the moral of the story this week. There's another trade that this happened as well. And now we go into Thursday. So this trade was a trade that won on Thursday. So 1 hour breaker structure came up, retraced, and then we have our 5 minute shifts up. So we have a 5 minute breaker structure here. And yeah, so we're basically bullish now, and this becomes my week high because we've already retraced, and now I'm the time frame order flow is done bullish. So this is kind of like a week high, draw liquidity. And then we have another 5 minute breaker structure here. So even more confirmation, we retrace down into it, and then we get a nice 5 minute type 2. So yeah, so we get that, entered off of that, and yeah, it took a while. It took the entire day pretty much, and then the next day, 2 p.m., which is when I woke up, it hit TP. So literally as soon as I woke up, it hit TP. So that was nice. And now we come to this trade. This is the maddest trade of my career. Okay, so we had a 1 hour breaker structure. Came down into New York, swept the inducement. Pretty sure we swept Asia. So very good confluence that we're going up. Reacted off a level here. Perfect 5 minute shift up. Very nice. And then a small retracement into it, and then we get the 1 minute confirmation, which is a perfect 1 minute type 1. It's beautiful. And we immediately get, well, it was a market order, so we're in already. Comes down a bit and then goes straight up, bro. And I was just like gassed. I'm like, yeah, I'm the best. And then it comes back down immediately after that, leaving this much space between price and my take profit. Literally a pip. Like literally 1 pip. And man, like I'm pretty sure like it was like touching it when the order was there, the line was there, it was like touching it, it was on it, it was like feeling it up real nice. And yeah, it came up, came down straight to take me out, and then went straight back up. Didn't even come down and waffle around all night and then continue back up the next day. It came down and then went all the way back up within the same night, within the same like 2 hours that I took the trade in. So yeah. Yeah, so that is what it is. we got a bit unlucky today, not today, this week, with two of those trades, with that happening, getting slipped out of this one and this one. But that is a part of the game. My psychology is good enough that we were still profitable this week, even with that happening. So by having very good risk management, that is what gave us a profitable week. Risk management is the key. I cannot stress this enough. I cannot stress the importance of that enough. When you take a win, keep your winners, take it for the day. If you take a loss, leave it for the day. Like, be patient, always live for another day. Don't rush things. And being able to do that just really comes from having a very good understanding of your strategy. If you've done the work beforehand, you've tested a large amount of trades, whether it was live testing or back testing, and then you have a quantifiable truth, like you have a set of data that somewhat follows your strategy or perfectly follows your strategy. Because if it's a discretionary, it's not mechanical, so it's not going to perfectly follow every time. But if you have a track record of data, quantifiable numbers that you can say my win rate is exactly this, my win rate during this session is this, the number of trades I can lose in a row is this, the number of trades I can win in a row is this, the average distribution of wins and losses, am I usually winning like 1 win, 2 wins, and then 1, 2 losses, and then another 2 wins, and then 3 losses, and then another win, and then 2 losses. Like, understanding what that looks like is when your psychology will be good and when your risk management will be good. So that is a reason I think a lot of traders fail, is because they don't do the real work beforehand. They just want to jump into the markets and make money. And obviously, if you're doing that and then you're taking 3 losses in a row, 4, 5 losses in a row, you're going to stress out, and you might overtrade, and then you might over risk on one trade, or you might hold one trade for longer. Not understanding that the strategy you're trading will very well lose 5 trades in a row very often. Like, within every 50 trades, you will lose 5 trades. Like, you will. There's almost 100% chance of happening. And if you don't understand that, because you haven't done the work before to understand your win rate, then that's when you can get tripped up. So the moral of the story is, if you're trading, do the work. Actually do the work. Don't just take a strategy from some YouTube video, for some guru or some mentor, and then just start trading like live, and then like expecting to make a lot of money. Like, take it, trade it, but collect the data on it, and understand that that's what you're doing. Is all you're doing is you're just collecting data. You're just trying to trade your system as best as it can, so you can trade it for real once you have a good amount of data ready. Yeah. So I have a lot of trades of data collected, and you guys have seen me lose 7 trades in a row, and then win 1 trade, and then lose 2 trades, and then win 1 trade, and then lose another 5 trades. So 7, 2, 5, 14 trades. In a period of 16 trades, I lost 14 and I won 2. And I'm still almost out of drawdown. And I'm basically like 1.5 trades out of drawdown now. You guys just saw the week I had. We're up 2% from this week. So if that happened to a lot of traders who didn't do the work, who didn't have the data in front of them to look at that this is very possible, they're going to keep trading. If that was me, I would keep trading on days where I don't need to be trading. And yeah, so yeah, obviously in that 16 trade period, me losing 14 isn't good. It's not normal. I made a lot of mistakes in some of those trades, but you should understand that even if you do make mistakes, like you still need that data there, so you can go back and look at what you did, and understand. It helps you understand when you're making mistakes. Now, at one point, it's not your strategy. Say my strategy was 40% win rate. I shouldn't lose 14 trades. Like, I mean, you probably can, but say 15%. You can't. Losing 7 trades in a row will happen, but it won't happen often. But losing 7 trades and then winning 1 trade and then losing another 10 trades, like that shouldn't happen. So yeah, But I learned from that. I knew what my data was. Even before I went on that losing streak, I had my data. So I knew after a lot of losses, I'm like, okay, I'm obviously doing something wrong now. Let's just take a step back. Let's review. And then you guys have seen on this channel, like after we did that, I literally talk about it to you guys live, what I realized from that day or from that week. And I add it to my data. And then I know what to do for next time. And then I learn more about my strategy. So at the end of the day, it's not it can be your strategy if you're trading a shit strategy, but if you've learned a strategy from a good place, from a good mentor, it's not this strategy and it's not your psychology. It's just you. It's just you. It's just you didn't do the work. It has nothing to do with, oh, my psychology is not good. I just like, I don't know, I just like don't take good trades. It's like, that can be true, but if that is true for an extended period of time, then the problem is that you just didn't do the work beforehand. And I've learned this lesson many times the hard way. I've never had someone explain this to me before. I've only realized this, like, honestly, within the last few months. Like, I've understood this much about trading. My first year, I did well at some points, I did bad at some points, but I never had a proper mentor. So I've learned all this, I've been through all this, and now I'm telling you guys all this. So if you've like watched this whole video, good job. I'm proud of you. I hope you learned something. But yeah, you need to keep that in mind. We're gonna wrap this up now. So in conclusion, just do the work, and you will see results. If you don't do the work and you just jump in, like, you're just wasting time. So do the work, collect data. Okay, goodbye. Thank you for watching.